Let us start with the deduction chapter, section 80C to 80U. We understand these sections 80C to 80U are mainly available under optional regime, right? They are not available under default regime. Only three sections for us, which is available under default regime, are 80CCD2, new pension scheme, employer contribution, 80CCH2, Agniveer contribution, employer contribution again, and 80JJAA, new workmen. These three sections are only available in the default. Otherwise, all other sections are for optional regime only. So let us start one by one. So if I talk about section 80C, 80C is deduction in respect of certain investment. Maximum deduction allowable under 80C is 1,50,000. And you also know this 80C 1,50,000 shares its limit with 80 triple C also and 80 CCD1 also, right? So all three sections clubbed together cannot be more than 1,50,000. So we can say that maximum deduction is 1,50,000 cumulative for all these three sections. What are the three sections? 80C, 80 triple C, and 80 CCD1. Just 80 CCD1. I'll be telling you what it is. Now, 80C deduction, individual or HUF can get this deduction. This individual can be resident also, non-resident also, doesn't matter. So he'll be able to get this deduction under 80C. Under optional regime, please don't give 80C and default regime. It is only under optional regime. Got it? Now, if he has made certain investment in the following, most important is LIC premium. So if the person has, assessee has paid the LIC premium for himself, for spouse or children, the children can be dependent or non-dependent over here. Parents are not covered over here, brother and sister are not covered over here. Even if the parents are dependent, doesn't matter. 80C will not allow those LIC premium. So LIC premium should be for the self, spouse, and children. That's it. Got it? Now, see, generally, please allow only up to 10% of the sum assured. Generally, if nothing is given in the question, so please generally follow 10% criteria. In excess of 10%, please don't allow it. Only up to 10%. You have to allow it. But you should know this date, 1st April 2012. If the policy date is before this date, 1st April 2012, then 20% is allowed. If it is after this date for next 1 year, from April 12 to March 2023, 2013, it is 10% of sum assured, and after that, it is 10% for physically handicapped, blind, deaf, and dumb. It is 15%, right? So please remember these percentages. Generally, 10% is most common and important also. If the employee has also, or the assessee has also contributed an annuity plan or employee contribution. It is not employer contribution, it is employee contribution. Employee contribution to statutory provident fund, recognized provident fund, then also deduction can be allowed. In unrecognized provident fund, deduction is not allowed. So please don't give any deduction if the assessee is contributing in unrecognized provident fund. No, it will not be allowed. Only recognized would be allowed, right? Sukanya, PPF, public provident fund, most common, right? PPF. In fact, PPF interest is also not taxable. So whenever there might be question, specifically a total income question, where there is written that interest is received in on PPF. So whenever the interest is received on PPF, that is not taxable under IFOS. It is an exempt interest. Got it? So Kanya Samriddhi is one of the investment. National Savings Certificate, NSC. Whenever the person would invest in NSC, then ATC is available. And even the interest on NSC. Interest on NSC is a taxable interest. Please, again, I'm repeating. Interest on NSC is IFOS. If somebody has invested in NSC and now this person is earning interest on it. So whenever he will earn interest on it, this is their IFOS income. But at the same time, if the person is following optional regime, so whatever the interest which is accrued on NSC, it is assumed that it is reinvested. So 80C will also be available. So let's say in first year, assessee has invested, let's say in 80C for NSC, 1 lakh rupees in NSC. So he will get 80C deduction of 1 lakh rupees if he is following optional regime. Second year, he has not invested in NSC, but he has earned some interest. Let's say he has earned 8,000 rupees of interest. So this 8,000 of interest, first of all, please make it IFOS income. This is an IFOS income. Secondly, this NSC interest, specifically I'm talking about NSC. This NSC interest, when it is reinvested, it is also eligible for 80C deduction. So in second year, although we have not invested in NSC directly, but this interest is deemed to be reinvested, 80C would be available there as well. Got it? ULIP If you have a purchase ULIP plan, then you can invest in mutual fund, tax saving mutual fund, or scheme of National Housing Bank. Not so important. Tuition fees is very important. So tuition fees paid for maximum two children. Paid for maximum two children. Grandchildren not allowed. Only children, and children always include stepchild or the adopted child. So in that case, if the assessee has paid tuition fees, what is tuition fees? That is normally school fees or college fees or any full-time education fees, which is a recognized course as per the authorities of India, right? And this education should be in India. If it is outside India, then ATC would not be available. Maximum up to two children. For more than two children, it will not be available. For third child, fourth child, it will not be available. It is for maximum two children, tuition fees. Principal repayment of housing loan. This is again important. First of all, the principal, please, whenever you will see this word principal repayment, will you give ATC always? No, it should be a housing loan. And that housing loan, that home loan, is only for the purpose of construction or purchase. If you have taken a loan for repair of the house, then ATC would not be available. It is only for the purpose of purchase of the house or construction of the house. ATC would be available, right? Fixed deposit of 5 years, minimum 5 years. Post office term deposit or deposit scheme for minimum 5 years. Bonds of NABARD. Senior citizen schemes or contribution to additional account under NPS tier 2. Tier 1, it is ATCCD. I'll talk about it. Tier 2, you can get this deduction over here. Got it? So these are ATC deduction. Most important of them is LIC. Parents, brother and sister not allowed in ATC. Only spouse or children, whether dependent, non-dependent, both are allowed. Got it? Then 80 triple C, not so important. But yes, the limit of 80 triple C is also 1,50,000. And the total limit, if we have already taken 115 ATC, then we will not get any reduction of 80 triple C. Why? Because the total limit has already been exhausted. So this also shares 1,50,000 limit with 80. See, if the assessee has invested in LIC pension scheme, in LIC, any insurance pension scheme, then 80 triple C would be available. Correct? Not so important section. 80 CCD is quite important. That is new pension scheme. 80 CCD. It has three parts: 80 CCD1, CCD2, CCD1B. First of all, let's understand about CCD2. First of all, CCD2 is employer contribution to new pension scheme. Employer contribution. It is available under both the regime. This CCD2, it is available under both the regimes, right? And how much it is available? 10% of the salary, maximum amount, whatever the employer is contributing, whatever is the employer contribution to pension scheme, employer contribution to pension scheme, right? Or 10% of salary, 10% of salary. What does salary mean? Salary means basic salary plus DA forming part, right? 10% of the salary. But if the employee is a central government or a state government employee, central government or a state of government employee, then you don't have to take 10%, then you have to take 14%. Got it? Now, CCD2 is for employer contribution available under both the regimes. But CCD1 and CCD1B, it is only and only available under optional regime. It is only and only available under optional regime. Now, this is employee contribution, or I can say assessee's contribution. So, this is assessee's contribution. See, CCD1 shares the limit of 1,50,000 with ATC, 80 triple C, and CCD1, it is 1,50,000. CCD1B does not share 1,50,000 with those sections. It has their own limit, 50,000 rupees, 50. So first of all, whatever is the assessee is contributing, assessee here means employee. So whatever is the assessee is contributing, first of all, rather than giving 80 CCD1 first, rather concentrate on 80 CCD1B. Correct. So how much would be the reduction? Whatever the employee is contributing, whatever is the assessee is contributing to new pension scheme, or rupees 50,000, whichever is lower. So here the maximum deduction is 50,000. So let's say assessee is contributing, for example, 1,30,000 rupees he is contributing. So first of all, give the deduction of 80 CCD1B. How much? Assessee's contribution 1,30,000 or 50,000, whichever is lower, 50,000. Now, out of 130, 50,000 we have availed the deduction. Now what are we left with? 80,000 rupees. Correct. So remaining employee contribution. Now CCD1 should be the last one which you should take up. Now whatever is left over here regarding assessee's contribution, that amount or 1,50,000, just subtract 80C and 80 triple C from that. Why? Because 1,50,000, if it is already exhausted in 80C or 80 triple C, then you will not get it. So just subtract 150, just subtract 80C and 80 triple C from 1,50,000. This is the second limit. And the third limit is 10% of the salary, right? 10% of salary in case of the assessee, salaried assessee. In case the assessee is not a salaried assessee, then you have to take 20% of GTI, right? So 10% of the salary, basic salary plus DA forming part. Or if the assessee is not a salaried assessee, then don't take 10% of salary because you don't have the salary income because the assessee is a non-salaried assessee. In that case, we will take 20% of GTI. So this is 80CCD, important. Now, CCH, Agniveer Corpus Fund, important. See, it has two parts again, CCH1, CCH2. CCH1 is related to employee contribution. Who is the employee here? Soldier, Agniveer. So it is employee contribution. CCH2 is employer contribution. Who is the employer over here? Because these people are employed in Army, Navy, or Air Force. So the employer would be central government, right? So whatever is the central government contributing, that is employer is contributing, that is CCH2. CCH1, CCH2 both available under optional, but under default only CCH2 is available. CCH1 is not available over there. Got it? So please remember, this is easy and important. There is no such limit as such. Whatever is the assessee contributing, CCH1, whatever is the employer is contributing, CCH2. But under default, only this would be available. Under optional, both are available. 80D, always one of the favorite for the examiner, 80D. This deduction is available to individual or HUF if they are paying for health insurance. Health insurance, Mediclaim insurance, accidental insurance, within the same thing. So it is available under 80D, and also preventive health checkup. I'll be talking about preventive health checkup within 6 to 3 minutes. So first of all, 80D is health insurance premium. Again, only under optional regime. It is not available under default regime. Got it? Now, what is the amount of deduction? We have two categories for individual, spouse, and children. For individual, spouse, and children here should be dependent children. See in 80C for LIC, the children could be dependent, non-dependent, but here, for health insurance, the children should be dependent. So self, spouse, and dependent children, what is the limit? 25,000. And for parents, parents can be dependent or non-dependent, both can be there, right? So parents can be dependent, non-dependent. Here again, the limit is 25,000. But if the parents are resident senior citizen, the limit will be increased to 50,000. So in this case, the limit would 25,000 would be increased to 50,000. And if the assessee himself or the spouse is a senior citizen, then again the limit would be increased to 50,000. So generally there are two categories, 25,000, 25,000. But if the person or the parents are the senior citizen, then 25,000 will be increased to 50,000 rupees. So this is the maximum deduction which we can get it over here. Health insurance should not be paid in cash. If it is paid in cash, we will not be giving you any deduction. Correct? Second thing, preventive health checkup is also allowed, but maximum up to 5,000 rupees limit, and 5,000 is an overall limit for everybody. And preventive health checkup can be paid in cash also. Maximum 5,000, and it is an overall limit. Next important point is whenever the health insurance premium is paid in lump sum, let's say if it is paid in lump sum, so it should be divided into number of previous year which it is actually covering. So let's say if there is a policy, health insurance policy, and it is covering some 3, 4, 5 years. So just see how many previous year are being relevant over there. So divide by the number of previous year, and in every case you will be getting this deduction. So let's say you have paid 72,000 rupees. 72,000 rupees you have paid, right? And it is for 3 years. You have taken the health insurance for 3 years. So what I should do? 72,000 divided by 3? No. You have to check that these 3 years, what are the previous year which are actually connected with this 3 years. So let's say some portion of it is falling in previous year 23, 24, 24, 25, 25, 26, and some portion is falling in 26, 27. Although it is 3 years, from here till here it is 3 years, but some of the portion is falling under these 2 years also. So we have to take the relevant previous year. So relevant previous years are 4 over here. So you have to divide whatever is the lump sum amount divided by 4, number of relevant previous year, right? So in this previous year, you will get 72,000 divided by 4, that is 18,000 deduction. Got it? So this is how you have to do. 80 double D. 80 double D means if DD, disabled dependent. So if there is any disabled person who is dependent on the assessee. It could be spouse, children, parents, brother or sister. I'm repeating, spouse, children, parents or brother or sister. If they are disabled and they are dependent on the assessee, so there is a flat deduction of 75,000. In case of severe disability, it is 1,25,000. And again, a very, very similar section 80U, where the assessee himself or herself is disabled. If the assessee himself or herself is disabled, so there is a flat deduction 75,000. In case of severe disability, it is 1,25,000. Next section is 80DDB. It is medical treatment of prescribed disease. Prescribed disease like tuberculosis, cancer, HIV, etc. It is available. All these 80D, 80 double D, DDB, all are available under optional regime only. So 80DDB, it says that whatever is the expenses incurred on medical treatment of prescribed disease, it should be prescribed disease only, or rupees 40,000, whichever is lower. This is the deduction. But in case the person for whom the medical treatment is done, this person is a resident senior citizen, so 40,000 limit would be increased to 1 lakh rupees. 40,000 rupees or 1 lakh rupees, as the case may be in case of senior citizen. This should be the lower of the following should be the deduction. In case we are getting something from the insurance company also. So what you need to do is, first of all, actual amount incurred or 40 or 1 lakh, whichever is lower, just first of all determine that value, whichever is lower, and from this value deduct if we are receiving anything from the insurance company, and the remaining amount would be the deduction available under 80DDB. Got it? Now 80E, again an important section, available only and only under optional regime. It is not available under default regime. No, it is only under optional regime. Education loan. So whatever is the interest on education loan, that is allowed under 80E. If the loan is taken by the assessee for himself, for spouse, for children, or for any person for whom he is legally liable, so they can give interest. So whatever is the interest portion, that is allowed under 80E. Correct? And if the principal repayment is made for education loan, that principal repayment you will not get deduction anywhere. Sir, can we get an 80C? No. 80C is only for home loan, and that too for purchase and construction of the house. That's not even for repair. So for education loan principal repayment, you will not get any deduction anywhere. Only the interest portion 80E is available. Maximum deduction could be available for 8 years, starting from the year whenever we have started paying the EMI. From that year, total 8 years, you can get the deduction. But 80 years thing is not that important. But please do remember that only interest portion is allowed. 80EE and 80EA are not so important sections because they are most of them are outdated sections. We can say these are outdated sections, so you can safely leave them. 80EE and 80EA, to some extent 80EEB also, because 80EEB says that whenever you purchase your e-vehicles and whatever is the interest on e-vehicle, that is allowed. That is allowed. See, if you have purchased this e-vehicle for business purpose, so for business purpose, if it is and you have taken a loan, the interest would be allowed under section 36. No need to come in 80EEB, right? 80EEB, you should come only in the case, first of all, the assessee is following optional regime. Second, if they are purchase any personal e-vehicle, personal car, or personal even two-wheeler would be there, right? Because if it is business purpose, then we can get the deduction under business expense only, section 36. We will not get the deduction over here. But if it is for personal vehicle, then we can get this deduction up to 1,50,000. So whatever is the interest or 1,50,000, whichever is lower, would be the deduction available. But the point here it is, why I'm saying that it is not so relevant, because here the loan must be sanctioned between these dates. So loan 1st April 2019 till 31st March 2023. At least learn this date. So if the loan has been sanctioned up to 31st March 2023, before our previous year, that is the reason I'm saying that these are quite outdated sections. So there are very little chances that the examiner will ask you questions on 80 EE, EA, and EEB. I don't think so. Okay. 80G donations. So 80G, whenever the assessee has donated the amount, he can get this donation. If he has donated the amount in these places. What are these places? First, if he has donated the amount over here, means mainly you will see national is written over there. So you will get 100% deduction, whatever is the amount donated. Second, Prime Minister Drought Relief Fund. There used to be some other, some more, but now they are deleted. Now it is only one. Prime Minister Drought Relief Fund. Please remember this word, Prime Minister Drought Relief Fund. Here you will be getting 50% deduction of the amount donated. Third and fourth, here you will be getting Here you will be getting 100%, but subject to a qualifying limit. And here 50% of the amount donated subject to a qualifying limit. First of all, let's see this. So National Defense Fund, let me read out the name. National Defense Fund, Prime Minister National Relief Fund, national, mainly national word you will see in most of the cases. National Children Fund, National Foundation for Communal Harmony, approved university, Zilla Saksharta Samiti, National Sports Fund, National Cultural Fund, Swachh Bharat Kosh, Clean Ganga Fund, National Fund for Control of Drug Abuse, PM Cares Fund. Here, if the assessee has donated, 100% of the amount donated would be the deduction only under optional regime, default regime, no. Second, this is Prime Minister Drought Relief Fund, 50%. Whatever is the amount donated, 50%. Now, if the person has donated over here for promotion of family planning, we have given a donation to any association who are approved association who are approved for promotion of family planning, or for Indian Olympic Association, it is only for the company SSC. If company SSC has given for Indian Olympic Association, to Indian Olympic Association, generally it will not come. If it can come, it could be promotion for family planning. If we have given a donation to any approved institution who are promoting family planning, then we can get the deduction 100% of the amount of contributed or 100% of the qualifying limit. How you will be getting the qualifying limit? Qualifying limit is actually 10% of adjusted GTI. So adjusted GTI 10%. And how you will be getting the adjusted GTI? You have to take GTI minus long-term capital gain minus 111A minus 112A minus all deductions from 80C to 80U except 80G. You will get adjusted GTI. So 10% of that is the qualifying limit. So here it should be 100% of the amount donated or 100% of the qualifying limit, whichever is lower, you will get this deduction. Here, if we have contributed in any approved charitable institutions, NGOs, etc., or for renovation of religious place like temple, mosque, gurudwara, or church, then we can get the deduction here 50% of the amount donated. 50% of the amount donated, 50% of the remaining qualifying limit. What is remaining qualifying limit? Let's say our qualifying limit comes to rupees 3 lakh. And we have already taken a deduction over here 2.5 lakh. So what is the remaining qualifying limit? 50,000 rupees. This is called remaining qualifying limit. So 50% of the amount donated or 50% of the remaining qualifying limit, you will get this 50% of the remaining qualifying limit. Got it? You will get the deduction under 80G. 80 double G deduction in case of rent paid only under optional regime, not in default regime. 80 double G. If the assessee is not receiving HRA, if the assessee is not receiving HRA, then this person can get 80 double G deduction. How much is the 80 double G deduction? Least of the following: actual rent paid minus 10% of adjusted GTI, actual rent paid minus 10% of adjusted GTI, 25% of the adjusted GTI, or rupees 5,000 per month, whichever is lower. Not so important section, but still rarely it can come. Rarely it can come. So actual rent paid minus 10% of adjusted GTI, 25% of adjusted GTI, or 5,000 per month. What is adjusted GTI over here? It is GTI minus all deductions from chapter 6A, 80C to 80U, except 80 double G. Right? And please remember that where this person is paying rent, he must not be having his own house, or his spouse should not be having the house, or his minor child, or to the HUF to which he belongs, they must not be having the house in that particular city where he is actually paying rent. 80 GGA, not so important, but if the assessee is let's say if assessee is following optional regime and he's a PGBP assessee, he is getting income from PGBP and he has donated for scientific research, then we understand for outside scientific research, section 35 deduction is available. Got it? For outside scientific research, section 35 deduction is available in case the assessee is having PGBP income. But if the assessee does not have PGBP income, then section 35 is not available for him. So in that case, if assessee does not have a PGBP income, then they can claim deduction under 80 GGA if they have 100% of the amount donated under optional regime only. If they have donated to Scientific Research Association or for approved rural development or urban or poverty eradication fund, there you can get the deduction. Mostly scientific research is important. So PGBP SSC section 35, non-PGBP SSC section 80 double G A, provided this person is following optional regime only. 80 GGB GGC is donation to political party. Mainly GGB is for the company assessee. For non-company assessee, it is GGC. So whenever the non-company assessee is making a donation to political parties, they can get the deduction 100% of the amount donated. But please remember, this amount should not be paid in cash. 80 double J double A is available under both the regime. 80 double J double A is available under both the regimes, whether you are following optional regime, whether you are following default regime. Here, if the assessee is required to get their accounts audited under Section 44AB, they are eligible. So if they have recruited new employment, if they have given new employment, as the number of the headcounts has increased from the last year, so whatever is the increased employees, they are giving salary to them. Paying salary is allowed as a business expense, but additionally, they will get 30% of the salary which they are paying to their employees. Who are the eligible employees there? First of all, these employees should not be getting salary more than 25,000. The salary should be up to 25,000 per month only. If it is more than 25,000, they are not eligible. Second, they should be a regular employee who are contributing in provident fund. Third, the minimum number of days which is required for it is 240 days. At least for 240 days, they must be working during the previous year. In case of seasonal business like footwear, leather, apparel, etc., it is 150 days. So it is 250 days, 240 days in other business. For seasonal business like leather, footwear, or apparel, it is 150 days, right? And for 3 years, you can get this deduction. How much? 30% of the uh, salary which you are paying to your additional employees. Under both the regimes, you can get these deductions. 80 QQB. QQB, RRB, both are very, very similar. And only under optional regime, you can get this deduction, not under default regime. QQB is for the resident individual. If this person is getting a royalty on books, see, royalty on books is our PGBP income or IFOS income. Generally, take it as an IFOS income. So, whatever the royalty which you receive minus expenses is your IFOS income. Thereafter, if you are following optional regime, then please give deduction under 80 QQB. How much? Rupees 3 lakh is the maximum limit, or the royalty income. What is royalty income? Whatever is the royalty you are receiving minus expenses. But if the royalty which you are receiving is more than 15% of the value of the book, please restrict that particular amount up to 15% only. I believe that you are able to make it out. If the royalty income which you are receiving is more than 15%, please restrict it up to 15% limit. And provided if you are getting this royalty from outside India, only that royalty will be taken, which is received in foreign currency within 6 months from the end of the previous year. Got it? 80 RRB is almost a similar section. Maximum reduction which is available over here is 3 lakh rupees. Maximum reduction is 3 lakh rupees, or your royalty income, whichever is lower, right? 80 TTA and TTB. TTA is for individual or HUF assessee, whether they are resident, non-resident. 80 TTA is available. How much it is? The amount of the saving bank account interest, saving bank account, post office saving account, or cooperative bank saving account. Saving account is important. Or rupees 10,000, whichever is lower. For individual or HUF, whether they are resident, non-resident, both will do. But 80 TTB is only for resident senior citizen. And if the person is a resident senior citizen, 80 TTA is not available, 80 TTB is available. What is the maximum amount of deduction? The amount of interest which we are receiving. This interest can be bank interest also, saving bank account also. It could be your fixed deposit or other deposits also, other banking interest also, which you are getting from bank, post office, or cooperative bank, or rupees 50,000, whichever is lower, only for resident senior citizen. And if the person is a resident senior citizen, they will not get 80 TTA, they will only get 80 TTB, right? 80U, we have already discussed. Person with disability, flat reduction 75,000. In case of severe disability, it is 1,25,000. Got it? Now, let us come to our next main chapter, last, in fact, main chapter, that is TDS and TCS. So, the first section in TDS is section 192, TDS on salary. TDS on salary, there is no such rate. It should be the average rate of tax. Not so important from examination point of view. Average rate of tax, TDS is deducted at the time of payment. And if there is more than one employer, then the assessee can ask any one of them. They can appoint any one of them that you can deduct tax from their salary, right? And in fact, if you can furnish your other income also, then you can furnish it. Your employer would be liable to deduct TDS. But if you are furnishing your losses, then losses would not be covered. Only the house property losses, in case you are following optional regime, that can be considered. But in default regime, we understand house property losses cannot be set off from salary income. So in that case, the losses will not be considered. Got it? So TDS on salary, section 192, average rate of tax, not so important as far as examination is concerned. Section 192A, premature withdrawal from RPF. So if recognized provident fund is getting withdrawn before 5 years, so before, see, if you are withdrawing it after 5 years, then it is exempt. But if you are withdrawing it before 5 years, then it will be taxable. If the amount which you are receiving is more than 50,000 rupees, it would be taxable. The TDS rate would be 10% in that case. Got it? Next important section, both the sections are not so important. 192 is still examiner can ask you, but please remember the rate of TDS is 10%. Payment amount should more be 50,000 rupees or more. Section 193, quite an important section. Section 193 is interest on securities. Examiner keeps on asking about these sections 193, 194, and 194A. All three are little bit important. Section 193 is interest on securities. So whenever you receive interest on debentures, interest on any other bonds, etc., then TDS would be applicable if the threshold limit is more than 5,000 rupees, right? So if you are receiving interest more than 5,000, then TDS would be applicable at a rate of 10%. In case of government securities, TDS will not be applicable, but in case these are government securities, taxable saving bonds, then TDS would be applicable. But for taxable saving bonds, please remember the threshold limit is 10,000 rupees. So for taxable saving bonds, the limit is 10,000 rupees. Got it? 194 dividend. Here again, the TDS rate would be 10% in excess of, if you are getting the amount, the threshold limit is 5,000 rupees. So if you are getting more than 5,000, then TDS would be applicable. If you are getting less than 5,000, TDS would not be applicable. So if somebody is getting 6,000 rupees, then TDS at a rate of 10%, that is 600 would be deducted by the company, because generally, who will give you the dividend? Companies will give you the dividend. So TDS would be deducted at a rate of 10% under section 194. 194A, among these three, 193, 194, and 194A, I would say that this is the most important section, 194A. It is interest other than securities. So if you are getting interest from other than securities, let's say you are getting a bank interest, FD interest, or other interest, or even if you have given a loan to someone, you are getting an interest, then TDS will be deducted. First of all, if you are receiving interest from bank, post office, or cooperative bank, then the rate of TDS would be 10% and the threshold limit would be 40,000. In case the person who is receiving it is a senior citizen, then 50,000 rupees. So please remember the rate of TDS is 10% in case of interest other than securities, 40,000 rupees or 50,000 rupees as the case may be if the assessee is a senior citizen. So for interest which is related by, which is given by the bank, post office, or a cooperative bank. Got it? If interest is paid by others, let's say you have given a loan to a partnership firm, you have given a loan to somebody else, and they are giving you interest, then the threshold limit would be 5,000. Rate of TDS would be 10% again. The threshold limit is 5,000. But please remember, if you have given a loan to any individual or HUF, so whether they can deduct TDS or not. So please remember a thumb rule that generally TDS is deducted only by a big individual or HUF. What do you mean by big individual or HUF? Whose turnover of the last year, whose turnover of the last previous year, last year, correct? So if the turnover of the last year is more than 1 crore of business, or in case of profession, it is more than 50 lakh, then only such individual or HUF is eligible to deduct TDS. So in most of the sections, you will see that individual or HUF can deduct TDS only if they are big individual or HUF. Please don't use this word big individual or HUF. This is just for your understanding. Please use this word in your examination. If the turnover of the last year is more than 1 crore in case of business or 50 lakh in case of profession, then only they will be able to deduct TDS, right? So this is 194A. 194B, 194BA, and 194BB. All three are quite similar sections. 194BA is quite a new section, but almost the similar provisions are there. The rate of TDS would be 30%. So 194B is mainly on casual income. So whenever you will win lottery or any game show, etc., other than online gaming, because for now, online gaming, we have a different section, 194BA. So 194B is winning from lottery, crossword puzzle, card games, or other games other than online gaming. So rate of TDS would be 30%. The threshold limit is 10,000. So if you are getting more than 10,000 rupees, then TDS will be deducted, right? In case the payment which you are receiving, it is in monetary form, then 30% TDS will be deducted. In case if the payment which you are receiving is not in monetary form, it is in kind. Let's say you have won a car or you have won any other thing in kind. Then in that case, See, the deductor will not be able to deduct the TDS. So in that case, he will only release the prize money only when you will submit the proof that the tax has been deposited by you. So here the receiver has to first deposit their tax. They have to give a proof to the deductor, and then the deductor will be releasing that particular price to you. Got it? 194 double B is winning from horse races. Again, the same rate. Rate of TDS would be 30%. Threshold limit would be 10,000. Got it? Now, there is a section 194 BA, which is a new section winning from online games. Here also the rate of TDS would be 30%, but there is no such threshold limit. So there is no such threshold limit. The rate of TDS would be 30%. When this TDS will be deducted, whenever you will be withdrawing the money, whenever you will be withdrawing the money, or if you are not withdrawing the money from your wallet or from your online gaming app, but at the end of the previous year, the TDS will be deducted on your net winning. Whatever is your net winning. What is net winning? Whatever is the winning, actually, it is, let's say, what is the closing balance minus your opening balance can be a net winning. Also, if you have withdrawn the amount minus deposit is your net winning. So whatever is your net winning, let's say you have started playing games by depositing 1000 rupees, and let's say at the year end you have 10,000 rupees in your wallet and you have not deposited anything. So how much is the net winning? 10,000 minus 1000, 9,000 is your net winning. They will be deducting 30% tax on it. 194 BA. And in case if the winning is in kind, so what they will be doing it, they will be asking you that please first of all deduct, first of all deposit your tax, give us a proof that the tax has been deposited, then we will be releasing this prize money to you. 194C, quite an important section. 194C, most of the time examiner will ask you about 194C. This is payment to contractor. So whenever we are making a payment to a contractor, if it is a single contract, the threshold limit is 30,000. In case if it is a multiple contract, then we have to see the aggregate of it. If the aggregate, either it is more than 30,000, start deducting TDS, or if it is not more than 30,000, but the aggregate exceeds rupees 1 lakh, then TDS will be deducted. TDS will be deducted at a rate of either 1% or 2%, right? It depends on the contractor to whom we are paying the money. If that person is individual or HUF, then 1% TDS rate will be applicable. If that person is not individual, not neither individual nor HUF, in that case, 2% TDS will be deducted. Got it? So please remember 1% or 2% threshold limit 30,000 for a single contract. If the contract is less than 30,000, no TDS, but aggregate, if it exceeds rupees 1 lakh, then TDS will be deducted 1% or 2% depends on the contractor. Got it? So who will be deducting the TDS? See, whosoever has given a contract, that person, a company can deduct TDS, firm can deduct TDS, any other person can deduct TDS, but individual or HUF can only deduct TDS if they are big individual or HUF. What does mean by big individual HUF? If their turnover of the last year is more than 1 crore of business or for profession more than 50 lakh, then they will be deducting TDS. Got it? This contract can be for catering contract, it could be advertisement contract, it could be any type of work contract, it could be any type of work contract where we are getting the work done. But let's say there is also one more question which generally examiner can ask. Let's say if we are purchasing something, let's say from the job worker, we have said to him, job worker, you have to supply us material also, and you have to do the process also on that material, and that material is not supplied by us or neither by our associate. Then in that case, it's a purchase transaction. So in that case, TDS will not be deducted. TDS will only be deducted in case of work contract. Got it? So this is the TDS rate, 1% or 2%. Next section 194D, 194G, and 194H. All these sections are mostly related to commission and brokerage. So the threshold limit would be 15,000. In all these three sections, the threshold limit is 15,000. Rate of TDS is generally 5%. In 194D, for very rare cases, it is 10% also. Okay. 194D, this is insurance commission. So let's say if insurance company is paying a commission to their insurance agent, they will be deducting TDS at a rate of 5% if the threshold limit is more than 15,000. If we are giving them insurance commission more than 15,000, then only TDS will be deducted. Otherwise, TDS will not be deducted in aggregate if it is not more than 15,000. But if that insurance agent is a company, this insurance agent is a company, let's say insurance agent is Policy Bazaar. So whenever this insurance company will give commission to Policy Bazaar, that is a company, in that case, the rate of TDS would be 10%. Otherwise, 5% in all the cases. 194G is lottery commission, same rate, 5%, threshold limit 15,000. 194H Quite important. 194H is other commission or brokerage. For other commission and brokerage, the threshold limit would be 15,000. Rate of TDS would be 5% in this case. 194DA. This is also a bit important from examination point of view. 194DA. Whenever we will get life insurance policy amount on maturity. See, if life insurance policy amount which we are getting is in our maturity is exempt, then there will be no TDS. Got it? When it will be exempt, if it is a not a high premium policy. We have already discussed what is a high premium policy. It depends that whether the percentage of the premium is more than 20%, 15%, or 10%, as the case may be. Generally 10%. So if it is a low premium policy, then there would be no TDS. But if it is a high premium policy, then TDS would be there. Correct? The TDS rate would be 5%. 5% on the income portion. What is income portion? Whatever the amount which you receive on maturity. Whatever the amount which you receive on maturity. First of all, the amount which you are receiving on maturity, it should not be less than 1 lakh rupees. So if it is not more than 1 lakh rupees, then no TDS would be applicable. Here the threshold limit is 1 lakh. So the amount which you are receiving on maturity, it should be more than 1 lakh rupees. Second, that 5% would be the rate on the income portion. What is income portion? Whatever the amount which you receive on maturity, including bonus, extra amount which you are receiving, minus the premium paid during the tenure of this policy. Just subtract that, you will get the income portion. So please apply 5% rate of TDS. Got it? So please remember, on low premium policy, because it is an exempt policy, so no TDS would be applicable. On high premium policy, TDS would be applicable only when if the amount which you are receiving, the profit, no. The amount which you are receiving on maturity, including bonus, if it is more than 1 lakh rupees, then TDS would be applicable on the income portion. Then 194I. 194I is TDS on rent. The rate of TDS would be 10%, but in case of machinery, in case of plant and machinery, if you have taken it on rent, the rate of TDS would be 2%. In case of other things, the rate of TDS would be, so rent of furniture, rent of building, etc. Rate of TDS would be 10%. Only rate of plant and machinery would be 2%. Got it? The threshold limit is 2,40,000 for the year in an aggregate. So if you are paying more than 2,40,000 rupees, then TDS will be deducted. Only big individual or HUF can deduct TDS. If the individual turnover is not more than 1 crore of business or 50 lakh of the profession, they will not be deducting TDS. But there is another section which is quite important, 194IB. This is an important section. It also says that if there is any individual or HUF who is not able to deduct TDS under 194I, why he is not able to deduct TDS? Because might be his turnover is not more than 1 crore or 50 lakh, as the case may be, or might be this person is a salaried SSC. That is the reason he does not have a turnover, but he is paying a rent. So here actually government would like to track the high value transactions. So that is the reason they are saying that if such individual or HUF who are not covered under 194I, but still they are paying a rent, a significant amount of rent. How much it is? For a month, it is 50,000 rupees or more. If you are paying 50,000, more than 50,000 rupees rent to someone, then you will be deducting TDS also. Even if you don't have a TAN number, it's okay. You have to deduct the TDS. So this is quite a special section where even if you don't have a TAN number, you have to deduct TDS. So here, small individual or small HUF can deduct TDS, whose turnover of the last year is not more than 1 crore or 50 lakh, as the case may be. But the amount of rent which they are paying, it is more than 50,000 for a month or part of the month, right? Here, the rate of TDS would be 5%. And when you have to deduct TDS, it is important. You have to deduct the TDS at the end of the year. So whatever is the last month of the year where you have to deduct TDS. So majorly in the month of March 2024, you have to deduct TDS 5% on the entire rent which you have paid during the year. Correct? And if that particular house is vacated before the end of the previous year, so whatever is the last month of tenancy, you have to deduct the TDS there, right? But you also know that if the PAN number is not furnished by the deducted, then we deduct the TDS rate would be the applicable rate of the section or 20%, whichever is higher, right? We all know this. So in case the PAN number is not furnished, then we will be deducting 20% rate, correct? But in this case, please remember the TDS should not be more than the last month rent. It should not be more than the last month rent, correct? 194 IA, so section, sometimes they can ask you 194 IA, that is if we are purchasing any immovable property in land or building which is 50 lakh rupees or more, then TDS would be deducted at a rate of 1%. So TDS would be 1%. Threshold limit is 50 lakh rupees over here. 194J, again quite an important section. 194J is quite an important section where TDS is deducted. On there are five things over here. One, if you are paying professional services, you are paying technical services, you are paying royalty, you are paying non-competing fees, or a company is paying director fees to their directors. So on all these things, 194J is applicable. The rate of TDS is generally 10%, but there are 2% cases, 2% rate also in certain cases. Second, the threshold limit is 30,000 and for each services. For technical services, 30,000. For professional services, separately 30,000. Let's say if you are paying to someone 20,000 for technical, 20,000 for professional, then 194J would not be applicable. So you cannot add between technical and professional. No, they should be separate. So for all technical, aggregate them. If it is more than 30,000, then TDS would be applicable. So for technical services, 30,000, professional 30,000, royalty 30,000, non-competing 30,000. But for director fees, there is no threshold limit. Got it? For director fees, there would be no threshold limit, and the rate of TDS would be 10%. But 2% would be the case in case if it is for technical services. For technical services, the rate of TDS would be 2%. Second, if the amount which you are paying is of royalty on cinematographic films, it is 2%. On other royalty, it is 10%. But on cinematographic royalty, it is 2%. And second, if you are paying to a call center, then again, the rate of TDS would be 2%. So in three cases, the rate of TDS is 2%. Technical services, royalty only for cinematographic films. And third is payment to the call center, 2%. Otherwise, 10% would be the rate. Threshold limit is 30,000 individually, but for director fees, there is no such limit. For even if you are paying 1,000, 2,000, 3,000, you can deduct 10% TDS on director fees. Correct? Plus this director, the amount which you are paying is should not be in the form of salary. If it is in the form of salary, then 192 will apply. 194J will not apply. Got it? 194K is very much similar to section 194 TDS on dividend. 194K is income on mutual fund. So it is almost same. The threshold limit would be 5,000. Rate of TDS would be 10% in this case. 194 LA. It's a very, very small section, but I don't know why most of the time examiner keep on asking on 194 LA. It is on compulsory acquisition. So if you are compulsory acquiring any land or building other than agriculture land, then 194 LA would be applicable. Rate of TDS would be 10% and the threshold limit is 2.5 lakh. Got it? 194N. 194N, an important section. 194N is an important section, and the deductor would be bank, cooperative bank, or post office, where we have a bank account and we are withdrawing more than rupees, generally 1 crore, more than 1 crore in cash, then TDS will be deducted at a rate of 2%. So if we are withdrawing more than 1 crore rupees, then TDS will be deducted 2%. Please remember, in excess of 1 crore. So let's say if we are withdrawing in cash 1.1 crore rupees, so initial 1 crore no TDS, 0 to 1 crore no TDS, more than 1 crore TDS would be applicable at a rate of 1%. Correct? Provided this 1 crore limit would be applicable, provided the person who is withdrawing this money is filing their returns on time. If you are filing your returns on time, or last 3 years returns were filed on time, then 1 crore would be the limit. But if the person is a non-filer means that the person is not submitting their return on time, then the TDS rate will be 2% up to 20 lakh. So 0 to 20 lakh, there would be no TDS. 20 lakh to 1 crore, 2%, and above 1 crore would be 5%. Got it? So if the person is a non-filer, TDS rate would be 2% in excess of 20 lakh. So I can say 0 to 20 lakh, no TDS, and 20 more than 20 lakh up to 100 lakh, that is 1 crore, the rate would be 2%, and more than 1 crore, more than 100 lakh, the rate of TDS would be 5%. Got it? And there is a little important amendment also. In case the person who is withdrawing is a cooperative society, the person who is withdrawing, the person who has a bank account is a cooperative society, they are withdrawing cash, then 1 crore limit would be replaced by 3 crore limit. So if the cooperative society is filing their return on time, up to 3 crore, 1 crore would be replaced by 3 crores. So up to 3 crores, no TDS, more than 3 crores, in excess of 3 crores, 2% TDS. If this cooperative society is not filing their return on time, 0 to 20 lakh, no TDS, 20 lakh to 3 crores, 20 lakh to 3 crores, 2%, more than 3 crores, 5%. Got it? 194P. 194P, not so important, But please remember, it is only for senior citizen, only and only for senior citizen who are 75 years or more, and generally they have only two types of income. One income is pension income, second is interest income. And this interest income is coming from a bank account. This pension is also going, and this interest income is also going in one bank account, which we call it specified bank account. So this bank would be liable to deduct TDS under section 194p, provided if this person has more than one bank account, then 194p would not be applicable. So if 194p TDS is deducted, what is the rate of TDS? There is no such rate. It depends on the average rate of that person, whatever is the pension plus whatever is the interest which he is receiving on his saving account, FD, etc. So bank would be because bank would be knowing it that how much is his income, they will be deducting tax at the average rate. Whatever is his tax liability, they will be deducting tax as such. But if this person has more than one bank account, then 194p would not be applicable. If TDS is deducted under 194p, then this person is relaxed from filing the return of income. So this person is not required to file the return of income. 194q, if the buyer has a turnover of the last year more than 10 crores. If the buyer has a turnover of more than 10 crores of the last year and they are purchasing goods from a seller in excess of 50 lakh, then the TDS rate would be 0.1%. This is quite an important section. So please apply 0.1% in excess of 50 lakh. So if we are purchasing something of 51 lakh, then TDS would be on in excess of 50 lakh, that is 1 lakh into 0.1%. Got it? Provided the buyer turnover of the last year is more than 10 crore. There is simultaneously a section in TCS also 206C1H. If you don't remember the section number, that's completely fine. There's simultaneously another section. Let me cover that also. In case if the seller turnover of the last year, is more than 10 crore and they are selling any goods to a buyer more than 50 lakh rupees, then TCS will be collected at a rate of same rate, 0.1% in excess of 50 lakh. Correct? So if the buyer turnover is more than 10 crore, 194Q would be applicable. But buyer turnover is not more than 10 crore, but seller turnover is more than 10 crore, then TCS section would be applicable. If both the turnover is not more than 10 crore, no section would be applicable. In case both the turnover, the buyer turnover also and the seller turnover also is more than 10 crore, in that case, 194Q will apply, 206C1H will not apply. Got it? So if both the buyer and the seller turnover is more than 10 crore, then please apply TDS provisions, do not apply TCS provisions. 194R. It is actually whenever a person who is carrying a business or a profession and this person is receiving gifts, etc., right, from their clients, from their customers, etc., in the course of business. And if the value of the gift in aggregate it is more than 20,000 rupees, then the TDS will be applicable at a rate of 10%. So if you are getting this gifts from your in the course of a business or profession, then it would be and TDS rate would be 10% in excess of 20,000. If the amount of gift which you are receiving is more than 20,000 rupees, so on the entire amount, 10% will be deducted. So if we are receiving a gift of 30,000, so 10% would be 3,000 rupees. The TDS would be deducted. Got it? So let's say there is a YouTuber, there is a video influencer who is getting a gift, let's say mobile phone from a company for review also, and now he can retain this mobile phone also. And the value of this mobile phone, let's say it is more than 20,000 rupees, TDS would be deducted at a rate of 10%. Correct? And if this person would be after reviewing it, they will be giving it back, then there is no such gift, right? So if we have given to a video influencer, we have given a mobile phone of rupees 1 lakh rupees for review and we will take it back, then it is not a gift, right? Whenever we give it permanently, then only it is a gift. So this is 194R. So these are quite some important section of TDS. And for TCS, see, this is important. Motor car. So whenever a person who is selling the motor car, the person who is a dealer who is selling a motor car to the consumer, and this car is more than 10 lakh rupees, then the TCS will be collected at a rate of 1%. Correct? So TDS will be collected at a rate of 1%. This is an important section. Then TCS on overseas remittance. And tour package. First, let me discuss about tour package. See, if the tour package if you are going outside India, if you're going outside India, that tour operator who is collecting money from you, they will collect extra TCS amount also at a rate of 5%. At a rate of 5% up to 30th September 2023. So this there was a change in between. So up to 30th September 2023, the rate of TCS is 5% on the entire amount. On the entire amount. But from 1st October 2023 and onwards, now if you are going outside and this tour operator will be collecting TCS. If it is up to 7 lakh, they will be collecting 5%. But if it is more than 7 lakh, so up to 7 lakh, 5%, more than 7 lakh, 20%. So let's say now you are going outside and you have purchased a package of 10 lakh rupees. So on 7 lakh, it would be 5%. And in excess of 7 lakh, that is, let's say 3 lakh, it would be 20%. So this would be the TCS rate. This is an important section. Second is overseas remittance. Overseas remittance. See, up to 7 lakh rupees, you can freely remit outside India. Up to 7 lakh rupees, you can freely remit outside India. There would be no TCS. More than 7 lakh rupees, the TCS rate would be 5% if it is for education purpose or medical purpose. So if you are remitting the money outside India for education purpose or medical purpose, up to 7 lakh, there would be no TDS, but in excess of 7 lakh, there would be a TCS rate at a rate of 5% if it is for education or medical purpose. But if you are remitting it for education purpose by taking a loan, in that case, the TCS rate would be 0.5% in excess of 7 lakh. Up to first 7 lakh, 0 to 7 lakh, there is no TCS. In excess of 7 lakh, only there would be TCS. So let's say if you are remitting, let's say 8 lakh rupees, so 0 to 7 lakh, no TCS. On 1 lakh, excess amount, there would be a TCS. Now, if you are remitting for any other purpose, it is not education or medical purpose, it is for any other purpose. We will generally assume that it is for leisure purpose or any other purpose. Then the rate of TCS will be, it is changed from 30th September 2023. See, in excess of up to 7 lakh, there will be no TCS. In overseas remittance, up to 7 lakh, it is no TCS. See, in tour package, there is no such limit of 7 lakh. Got it? In fact, TCS is applicable on all. Before 30th September, 30th up to 30th September 2023, it is 5% on all. And after 1st October 2023, on and after 1st October 2023, up to 7 lakh, TCS was there, 5%. But in excess of 7 lakh, it is 20%. But in overseas remittance, 0 to 7 lakh, TCS is 0. TCS is 0 in all the cases. Only in excess of 7 lakh, there would be TCS. Right. So for education and medical purpose, 5% TCS in excess of 7 lakh. If the education is by taking a loan, then 0.5%. In other cases, up to 30th September, if you will remit, it is 5%. But after 30th September, that is on or after 1st October 2023, the TCS rate would be 20%. So 0 to 7 lakh, nil, and 7 lakh and above 7 lakh, it would be 5% or 20%, depends upon when you are remitting this amount. So if it is up to 30th September, then 5%. On or after 1st October 2023, it is 20%. Right? 206C1H we have already discussed. So if the seller turnover of the last year is more than 10 crore, then and they are selling goods which is more than 50 lakh rupees. So in excess of 50 lakh, 0.1% TCS would be there. Right? So this was the end of the revision. So most of the chapters I have already discussed with you in this marathon. And I wish you all the best for your examinations. Please do your examinations very patiently, very peacefully, but please maintain your speed from the very beginning. Please do maintain your speed from the very beginning. I would suggest this is a general instruction. If somebody would like to follow something else, then it's perfectly fine, but it's a general instruction. I would highly, highly suggest please try to complete your GST first. First, try to, because GST is a smaller portion in your examination. Try to cover first GST in, let's say, less than 1.5 hours. So give more time to income tax, give less time to GST, but please maintain your speed from the very beginning. Don't go very slow. Just maintain a good speed from the very beginning, but very peacefully, patiently. Correct. So first of all, I would suggest in first 60 to 70 minutes, 70, 75 minutes, try to complete your GST portion. Then come to your income tax. Then come to your income tax. And in income tax, I would suggest first complete your all your questions, including MCQs. Then last 30-35 minutes, please keep it separately for your total income questions. I would suggest that total income questions, if you want to do it before also, you can do it. But my recommendation is that please try to attempt the total income question at last. But please try to keep at least 30-35-40 minutes for the total income questions also. But please maintain your speed from the very beginning. Correct. And please, all of you, please remember you have to start each and every answer from the fresh page. Please start each and every answer from the fresh page. Thank you so much and all the very best.